and welcome to this short video series based around financial planning when moving to France. For those of you that don't know me, my name is Tracy Leonetti. I'm a relocation expert based in the south of France for the past 30 years. And you know, when I came to France 30 years ago, I struggled. I struggled with the visas, I struggled with the paperwork. Changing my driving license was a nightmare, and I thought it should not be that difficult. And that is why I created LBS in 2012 to really help people like yourself who are moving, living, or creating a business in France, to really help you with those paperwork footsteps. I also created in 2016 the Serenity Club, which is really a club where I help people for the first year in France with all of the paperwork problems, from visas through to healthcare, through to driving license, and of course up to renewal of the residency card. Because, you know, I really realize that we have lots of questions, and we may reach out to the social media, we may reach out online, we may speak to friends and people who've had the same experiences, but there's never one situation is the same, and we have questions that we always wonder if it's the right answer. And when we're thinking of moving to France, we may think about, you know, the visas and the healthcare, but oftentimes we do forget about the financial perspective of you move to France. There can be a big impact. And I see this a lot with my clients when we have our first consultation. There's lots of questions around the financial side of things, and they don't have always the right answer. So that is why this video series has been created. I really want to give you some clarity on some of these important questions. So if you missed the last video that we did last week, it was on the planning perspective of your move to France and how to forward think and forward plan what to do and what not to do. Today, we're going to dig down a little bit deeper into a subject that I know is really important to everybody. It's about succession and inheritance rules, and how the differences between the UK and French system particularly are important to understand. Of course, to help me with that today, I have, of course, Simon Eveleigh with me. He's a partner at Blevins Franks. He's based out of Aix-en-Provence. But who better to speak about how he can help you and what he does than Simon himself. Simon, welcome, and thank you for joining me again today.
Okay. Yeah, as Tracy says, Simon Eveleigh. I work for a firm called Blevins Franks. We are a wealth management company. We provide financial planning advice to people who are looking to move to what we call our core countries in continental Europe. The three main jurisdictions we operate in are Spain, Portugal, and France, which is, surprise, surprise, the places that the Brits most like to move to and retire to. We're obviously talking here specifically about France. I've been living here and doing this job for 15 years, so not quite as long as you, Tracy, but been doing the job for longer than that. And been living and working here in France for that last 15 years. And I think that's important, because not only can we provide the financial planning advice, we also have an understanding, as you do, Tracy, of the sort of the practicalities of living in France. Because quite often you might find that there's a rule that says you can or can't do this, but the rule isn't applied in quite the way that it's written in the textbook. So understanding that and having lived that ourselves, I think, is also an important part of the planning process for clients.
Absolutely. And this is the thing, is when, you know, I speak with my clients at the beginning, there is always this aspect of there's the rules, which of course we all have to respect, but then there is always how they are applied and how we can work with those rules to get the right solution for our clients. I know that's the objective for all of us, really, to find the right solution for our clients. A very quick reminder of our kind of family that we've put here, to give a bit of context to some of these very difficult questions that we have. Basically, I've put here, there's Mr. and Mrs. Smith, who, of course, like many people, are on the second marriage, or maybe even third. It might not be quite your situation. We have children from a previous marriage, but also a child from their marriage together. We have possibly the grandparents or grandparents that might be moving across with them. Mr. and Mrs. Smith have a property in the UK. They have a property in France. Grandad Smith will have private pensions, estate pension. used to work as a teacher. Obviously, they'll have ISAs because that's very popular in the UK. So that is kind of an idea of a family, okay? And it might not be exactly your situation. I'm sure Simon will speak about that as well. But it's just to give you an idea of some of the situations both Simon and I meet in our day-to-day contact with our clients. So, Simon, difficult subject, I know. Lots of questions, lots of confusion around this. So I kind of want to kick it off with the idea, I know the rules are quite strict to protect children in the French inheritance system. But from your experience, what would you consider are the main differences between the UK and French inheritance systems when you have kind of a situation like our family in front of us here today?
Well, the main differences, and I suppose there are two major differences between the two systems. The first one is in the UK, I write a will and I leave what I have to who I like, and nobody else can tell me what to do with my money or my assets. In France, the Napoleonic Code decrees that there are what they call reserved heirs. Now, once upon a time, the reserved heirs was quite a broad category of people, including parents. Now, reserved heirs are children, and that when I talk about children, I mean your bloodline.
Yeah.
So stepchildren do not count, and it depends how much each child gets. Depends on how many children you've got. It's rather complicated. For example, if you only have the one child, they're entitled have an automatic entitlement to 50% of your estate. If it's two children, they must share 2/3 of your estate, and if it's three children or more, it's 3/4 of your estate that must be divided equally between them. The other major difference is that in the UK, when somebody dies and if there is inheritance tax to pay, it is the estate that pays the tax. So there's a calculation done on the estate, which determines how much tax is paid. In France, it's the individual beneficiary that pays the tax, and the allowances and the rates of tax applicable are determined by the relationship between the deceased and the beneficiary. So those are the two major differences between the French system and the UK system.
It's really complicated, and because I thought that if, like, this family, they've made a will in the UK, they could then just kind of do a copy and paste in France effectively and do the same thing in France that they had in the UK, like equally distributing their wealth to their children. But in fact, what you're saying is that's not the case.
No, not necessarily. I mean, there is a mechanism, an EU mechanism called Brussels IV legislation, which effectively would allow a British couple living in France to use their home law, so English law if the English and Welsh law if they come out of England and Wales, or Scots law if they're coming out of Scotland, rather than French law. So that could help them to bypass the forced heirship or reserved heirs bit of it. But it doesn't bypass the taxation because the tax would still fall in France. So, and the thing to say, of course, is even if they can bypass the reserved heirs bit, it will mean that the child who doesn't belong to the second to die will suffer a huge tax bill on anything they will receive from their step parent. So whilst you might think you've been very clever in doing the planning so that you leave everything to each other and then the children share it equally between them when the second one dies, you could have created a massive tax bill for one or other of the children along the way.
Yeah, that's complicated, isn't it? Because the stepchild effectively will pay more tax than the actual child who is to them. Is that correct?
Correct. Yeah. I mean, the bloodline relatives, so your own children, they will receive 100,000 euros tax-free allowance. There are small bands at 5, 10, and 15%, then a large band at 20%, which takes care of about 550,000. So basically, if a child receives anything below 650,000 in round numbers from their parent, they will never pay more than 20% tax on that. If the person who is receiving the money is unrelated to the deceased, and stepchildren are unrelated to step parents, they get an allowance of €1,594, and they pay 60% tax on the rest of it. So you can see that there is a massive difference between money left to your own children and money left to a stepchild.
That's absolutely crazy. Now, I know there are some solutions that you can probably put in place to help protect the stepchildren, maybe. And we'll probably discuss that maybe in the investment session. I think that's the next video coming up. But for me, it's like, also, how do we protect the spouse? So if one dies and the spouse is left, how does she get protected with the asset? Because if the children are going to get 2/3 of it, how is the wife protected then?
There are ways of protecting. I mean, there is an automatic protection as far as the family home is concerned, and the best way of protecting a spouse is via a will that gives them the right of use, or the usufruit of the asset. And particularly in a scenario where you've got stepchildren, what you don't want to do is to leave a position where a step parent will be giving the money or the assets to one of their stepchildren. So the best way to do that is for the parent to leave an asset to their own child, but leave the surviving spouse with the right of use of that asset, because then the spouse can continue to benefit from the asset. But on their demise, it is not an inheritance from step parent to stepchild. It is deemed to be an inheritance that was received, even if they didn't actually get the asset at the time. It's received from their own parent, if that makes sense.
Okay. So it protects the spouse during the lifetime of living in the property, but at the same time protects both the child from them and the stepchild as well to get the rights. Okay, that's a really good idea. Excellent. Okay, so I think as well we need to look about how we can protect the financial side of the stepchild, because what you said, which I think is absolutely astonishing, is that anybody who's not blood related will pay, and correct me if I'm wrong, Simon, 60% of anything over about 1,500. Is that correct? Is that?
Yeah, very generous allowance of €1,594 and 60% tax on the rest. So, I mean, it doesn't have to be just, we're talking here about stepchildren, but for example, it is quite common for you to put in a will, the person who's been doing my garden for the last 20 years, they've done a fantastic job, a little gesture of recognition. I leave them €5,000 or £5,000 in my will. That's a fairly common thing to do. In France, if you do that, the French taxman says, thanks a lot, I'll have a little bit more than the gardener's going to get from your will. So what you can do is, there are certain forms of investment in France, and you mentioned a minute ago, Tracy, we're going to do a separate session on investment, so I won't go into great detail here, but there are certain sorts of investment that will allow you to effectively give anyone a sum of money up to €152,500 without any taxation, provided that the investment is placed before your 70th birthday. And we'll talk in more detail in another session about it, but there are ways around it, and there are ways of allowing you to pass assets on to people who aren't related to you in a tax efficient manner.
Excellent. So what I want to just finish off on this one is, as we've got Mr. and Mrs. Smith here who have a will in the UK and are moving to France, at this stage, then, anybody in this type of scenario, mostly, do you think they should be obviously getting advice from yourself on the tax efficiency of their estate planning for their children and stepchildren, but then they should also get their will translated and go see a notary to get to do that, do you think, as well, or not?
A simple translation of the will may or may not be appropriate. It might be, depending on what they want to achieve, it might be that they actually have to rewrite the will. It depends whether they want to make use of this Brussels 4 legislation and write a will using English law. They've got to be careful with that, because French law changed in November 2021, and basically what the French government has said is that if somebody is using a Brussels 4 will to circumvent French rules, somebody who is disinherited, i.e. a child who is left out of an estate, can challenge that on the death of their parent, and they will win. Now, we suspect that somebody will challenge the French government's view of things in the European court at some point. But as things stand, using a Brussels 4 will, it's a very grey area, and it might not work the way you want it to. So just literally picking up your UK will and bringing it to France may not be the right thing to do. So you need to speak. It's not really our area of expertise. You need to be speaking to a notaire about it. We can obviously help point clients in the right direction, and we generally, what we do is we make sure that clients have everything sorted. So when they go to the notaire, they say, right, this is what we want to do, because this is our situation, and this is what we want to achieve. But ultimately, it needs to be put in place by a French notaire.
Yeah. Okay, that's fantastic, because obviously with my clients, I do have people who have wills in place in the UK, and I always say to them, that's something you need to speak to a notary about. But I think, like you say, it's very important that before they see the notary, they know exactly what they want to do as well, knowing the fact that the rules are very, very different. Firstly, thank you so much, because I think the information you've given here is certainly food for thought for many people, I hope, who are watching this. We've looked at how there are so many key differences between the UK and the French system. And as I say to my clients, and I'm sure you do, Simon, is there's no one situation is never the same. And, we're looking at this particular family, but everybody's family could be slightly different. So if you want to, if this has kind of sparked some questions, some problems or some worries, then don't sit with that. Reach out to myself. I can point the direction of Simon, or you've got Simon's details here. Reach out. I'm sure I'll be happy to help you with that. Simon, is there anything you want to add before I finalize this video? Is there anything you'd like to add?
One general point, really, Tracy. I mean, you said it yourself that no one situation is the same as somebody else's. So each individual circumstance needs to be taken into account. What we would always say is that you need to think, right, you need to be able to list what you've got. You need to be able to also list what your aims and your objectives are. And then, armed with that information, we can hopefully match the two so that your current situation and your aims, longer term aims and objectives meet.
That's fantastic, and exactly very much loops back into the planning session that we had in video 1, as in know what is that you have now and what you would like to see happening, which it kind of comes full circle. So that's fantastic. So in our next video with Simon, we'll be taking these differences again to another level. We'll be looking at the follow-up to this, which is of course looking at the investment planning that you can do to help protect your money, to protect your family, and protect those important beneficiaries as well in a most tax efficient manner. So if you've enjoyed this video, please do let us know. Please follow us, please share it, and of course lastly, do reach out to us if there's anything we can help you with. So thank you once again, Simon.